All right, good morning, everyone. We're going to kick it off. All right, you can see there the S&P really opened up down sort of 10, 12 points, hung around there just for the first hour and a half of trading, and then just started the grind higher. And we really just, for the rest of the session, we were really just trading higher. You can see there defensives were down on the day. Guys were putting some risk back on with telecoms and utilities down, but the rest of the market was really up across the board. Really quite a great turnaround from where equity markets were 3 days ago, and still don't really have a deal on the table yet. So I think this is it's really interesting how we're seeing this play out. Right now we've got Treasury futures that fell to sessions low on the 14th day of the government shutdown. The expectations are obviously that both sides are going to make a deal, and that's why we're getting this equity market rally. But I think it's it's still impressive that we're able to do this, with the consequences of what will happen if we don't get it done. So it's quite amazing. You can see Asia pretty much up across the board there. We had Shanghai that lagged a little bit on the back, I think, of some of the numbers that were out over the weekend. And then Australia really got a boost, I think, a little bit out of Rio Tinto's earnings, which were a little bit better than expected. And obviously still just following in the back of the footsteps of the U.S. market turnaround yesterday. You can see Rio's numbers there. We have 53.4 million tons of iron ore output. The expectation was for 53.3. It's really in line, but that is a record for them on iron ore output. I think there's going to be a lot of records across the board in iron ore output for some of the majors over the next 6 months. They're really expecting the iron ore price to fall because of that, but we haven't really started to see it happen yet. Copper, 162,000 tons. Expectation was for 139. I mean, that's quite a big beat. We're raising 2013 mined copper forecast to 590,000 tons from 565, which is obviously a nice revision to the upside. And then refined copper, they're also upgrading the forecast to 270 versus 230. So all in all, I think numbers out of Rio Tinto definitely look a little bit like a beat. And so I think you saw that in Rio's abilities and the mining stocks in Australia, and it helped to lift the Australian index a little bit. Tonight we've got, or sorry, not tonight, before the U.S. bell, we've got Coca-Cola and Johnson & Johnson. And then we've got Citigroup later as well. We're getting ready to start to get into the meat of earnings season, so this is going to be really interesting with everything that's going on being in the middle of earnings season as well. All right, we had Japanese industrial production out overnight, a little bit worse than expected. We've got CPI numbers out of France, the UK. We've got PPI output numbers out of the UK. We've got the ZEW survey for current situation and expectations out at 11, and Empire manufacturing numbers out at 2:30 in the States. Remember, the ZEW numbers have really been moving markets quite well over the past few months. So keep your eye on that one at 11 o'clock. I mean, we could get a little move in the European equities and futures on the back of that. All right, let's jump into the maps. First thing I want to look at here is First Rand. Okay, you can see First Rand here. It's quite straightforward, obviously, but we yesterday we punched through to, I mean, you can take the wicks into account. We still got to all-time highs even on an intraday basis, but we closed definitely at all-time highs. You can see here really just a nice little continuation pattern, kind of moving from the bottom of this range up, and it really kind of comes across to test. So if you look at that, it lines up really nicely. We broke out, we came back down, tested support, and then we managed to really hold support well. And broke out to the upside. So it's a really nice little chart. Kind of looks like we're going to continue to push higher from, call it 330, from the breakout point of about 34.60. So we'll say we've got another $1.30 to the upside from 34.60, puts us up close to 36 Rand on the target there for First Rand. Obviously the banks across the board still look strong. We won't get into all of those. We've shown them so many times over the past month or so. All right. Xara proving itself again yesterday. You can see here we had this big wick. Let's shorten it up a little bit. We had this big wick dropping support intraday. This is really important. I had a couple people who were like, geez, Xara is dropping support here. Should we be looking to get short this thing? I think what's so important on days like that is to get confirmation, and wait to see if it's gonna kind of close below those levels, which are so vital. Because if they don't, then you really end up on the wrong side quite badly. And I think this chart is definitely looking more bullish anyway. So just be careful in the way that you're kind of entering, these kind of trades, and not to be too eager to get into them. Remember that it's better to sell down when you really have confirmation that you're right than to get the special price because you're jumping in early. Anyway, this thing's looking like it's flagging here quite nicely. And after yesterday's action, I wouldn't be surprised to see us kind of take this out to the upside today. You did have Kumba. We'll just have a really quick look at that. Kumba, which finally starting to push through the upside of this potential flag. This thing was just kind of grinding sideways while the market's been trading higher, and it looks like we may have been broken out of Kumba to the upside. The chart doesn't look quite as bullish in the long term, but it's still a little bit of a flag nonetheless. All right, let's look at breweries. Breweries, let me back this out a little bit. Breweries, you can see here, there's 3 or 4 sessions here. We've really been hovering around trend line. Sorry, not trend line. We've been hovering around the 200-day moving average. You can see here, every time we kind of come down and test this trend line, we manage to kind of hold this. It's been several times now over the, going all the way back toward the beginning of the year. And obviously we put in our top up here around 520. This thing is definitely, I think, a decent entry here. If we want to buy this at around the 200-day and also on trendline support, it's kind of a couple good reasons to be entering in. Not to mention that the rand has strengthened up in the last 2 weeks. So if we did get a weakening in the rand, this one obviously be well supported. So just watch this one around this level. I think this is a decent little entry. If we drop trendline support here, obviously we need to be out though. So let's just watch that. Keep that in mind. If you're getting in, you're playing kind of a range trade there. All right. Old Mutual, which we've shown this one several times, and really it's been in a bit of a narrowing wedge now for going on a few months. You can go back and you can really draw sort of a however you wanted to draw that. I know we were drawing it like that before, and we talked about it maybe breaking to the downside, and it's obviously given us a little bit of a head fake. But bottom line is trendline resistance here. This is if you back this out and you go out to a 2-year chart on this, you can see this is a bullish chart. This is not a This is not a chart that you are looking for opportunities to short. You're more looking for opportunities to buy. I think right here, that 2-year really makes it clear. We've tested 4 or 5 times on resistance. If we can push to the upside, I think there is definite room to the upside for Mutual. All right, Aspen. Let's have a quick. Aspen is just put in an absolute brick wall here, line for 260. It tried so many times to drop it. You can see how many times we got down there and traded around 260 and hasn't been able to break below the level. Really kind of flagging, and I think we've probably broken out from the flag already. I would actually maybe even take that in a touch tighter to really make it look right. But bottom line is this thing at 260 has been a brick wall. Right now it looks like we could easily take out the highs and start to move higher in Aspen, which has been one of the better, more solid stocks on the board for a long time now. All right, the last one we're going to look at here is Vodacom. We'll look at it. We'll actually shorten it up. Wait, before we do that, let's. Oh, geez, what did I do? Let's look at it here. You can see how big this level is, and how many days we closed down here around 1320, 1330. When you can see, if we shorten it up, you can actually still see the same thing, and you really just get a good idea for how important it is for it to survive this level. we could possibly move into a little bit of a head and shoulders if we bounce off of this level and start to form a bit of a right shoulder. So just watch this one closely. If this drops this level, I think you got to be playing short. If we go back multi-years, I think we also remember how important this level is here around 112 as well. So this is really a key area for us right now between 113 and 112. If you're looking for if you're watching this closely, once we sort of move and push away from this range, I think there's going to be some big opportunities here. You can see how important that little range is. So just watch it over the next couple of sessions. I think there could be an opportunity once we move away from it. That's it for today, guys. Thanks a lot.